Well, let's start the class. So today's class is about financial statements, presentation and preparation of financial reports or statements. Okay. So now I'll just ask you some question. This is Mr. A. Okay. Mr. A is doing a business. Okay. Let's say he has a bakery. So Mr. A wants to, Mr. A, what he does, he has invested $100,000 in the business. Okay. So can I say this is his equity or capital? Please tell me.
Capital.
Yeah. Is it equity or capital? Yes. So the money invested by a proprietor, money invested by money. Just a second. Just a second. Mariam, you have to check your laptop or something. I don't know. Like voice is clear. Bisharo can hear my voice. Bisharo, you can hear my voice now.
Yes, I can
I
hear
don't
you.
know. Yeah, but like other student is having some problem. Okay, so Mr. A has invested like $100,000 in a business. Okay, this is his capital. So now, but like the total, yeah, this is his capital, and he is in the business of bakery. So he will definitely sell, like let's say he sells cakes. So he sells 100 cakes in a month, uh, like 100 cakes in a month. So he sells on an average like 1200 cakes in a year. Okay. So generally we prepare the financial statement or reports at the end of the year. So each cake is like of $10. Okay. So 12. So his revenue would be how much? Revenue would be 1200 cakes at the rate of $10. So $12,000 is his revenue. Is it right? Is it correct? Yes. Is it right? Fine. Now, revenue is nothing but sales. Okay. So the general or easy term for revenue would be sales. See why Mr. A is doing this bakery business. What is the motive behind this? The motive is profit. So any business in the world is done with one single motive, that is profit. Profit is the motivation to do business. If there is no profit in a business, there is no use of doing, or it doesn't make sense to do a business. Correct? So sales is of $12,000, and the cakes which he is selling at $10, the cost of those cakes are, let's say, $6. Okay, $6. So it costed him like $6 to make that cake. So so what is the cost all about? How will you like how this $6 you would get? So it starts from purchase. So he has purchased raw materials. Okay, and he is paying some salary to his staff. Salary to staff. He is paying rent of the bakery. Rent of the bakery. And he is paying some expenses, other expenses like electricity and all. So like if I have to say that the raw material what he has purchased is purchased for $2,000, and this salary to staff is around $1,000, and rent of the bakery is $1,000, electricity charges is $1,000. These are all his expenses. Correct? So the total expenses are how much? $6,000. Am I right or wrong? Please tell me, is it $6,000 or not? Yes. Now, so so he's selling for $10 and the expenditure of 1,000 cakes, 100 cakes is how much he 1,200 cakes he sells in a year, na? So for one cake, the cost is $6. How? $6,000 he is incurring, and how many cakes he sells in a month? Just a second, just a second. 1,200 cakes he sells in a year. So if I take 7,200 divided by 1,200, it makes 6. Okay. So I will include more some charges. So this is not the end. So some audit fees. What do you mean by audit fees? See, when you do a business, like you have to hire a practitioner, a chartered accountant, or a certified public accountant to review the books of accounts. Okay. So he's charging some $1,000, and some or the other legal charges he's paying to a lawyer whom he has hired for the services. So $200. So all around $7,200 is the expenditure, and these are all year expenses. Okay. So yearly expenses. So now the expenditure, the cost, like the cost what the baker is incurring is $7,200, and he is making how many cakes in a year? 1,200 cakes. So it's costing him $6. The expenditure for one piece of cake or one cake is $6. Okay. So now what makes sense is 1200 7,200 by 1,200 is $6. So if I write it like this, sales revenue is 12,000, cost, sales minus cost is like 1,200 at the rate of $6. It makes $7,200. So how much is the profit? Can you tell me how much is the profit? 12,000 minus 7,200 is how much? Yes, Bisharo. Hello. Hello.
Yes, sir.
Yeah, can you follow this? Are you able to follow, Bisharo?
Yeah, employer.
Sorry?
Yes, sir.
Yeah, you're following. So how much is the profit? It is 4,800, correct?
Yeah.
Yeah. So just write down all these points here. Just write down presentation of financial statement. International Accounting Standard 1 deals with presentation of financial statements or reports. Here there is Mr. A who is involved in the business of bakery, and he sells 100 cakes a month, 1,200 cakes a year, and he invested 100,000 dollars in this bakery business. He is generating sales or revenue of this 1,200 cakes. He sells each cake for $10. So he has generated revenue of $12,000, and he is incurring all this cost for those particular cakes. He's paying, he has bought raw materials of $2,000. He is paying $1,000 salary to his staff. He is paying rent for the bakery of $1,000. Electricity charges, he is paying $1,000. And audit fees, that means I already told you, to review the accounts, the books of accounts. He has hired some accountant who comes and who reviews the books of accounts. For that he's paying $1,000, and he has hired some lawyer for some legal, if there is a legal tussle or any legal battle or litigation, or someone like put some legal claims on his business, so he should have a lawyer. He's paying $200 for that. So all in all, the entire expenditure he's incurring is $7,200 for how many cakes? For 1,200 cakes. So per cake he is incurring a cost of $6. I divided all the cost. Okay. And like here we can see now revenue for 1200 cakes at the rate of $10 is $12,000. Cost for one cake $6 is incurring, so $7,200. So profit is $4,800. Correct? Did you understand this concept? Hello? Hello, Bishara, did you understand the concept? Please tell me. Hello.
Yes, sir. I'm hearing you. Sometimes the network connection is poor. Your voice
Yeah,
not clear.
maybe no, it's
Times.
raining here actually. It's raining here. It's raining in Hyderabad. So maybe like right now, like in my area, it's raining. So maybe because of that, like you may be having some network issues. But did you understand the concept? If you can let me know, please. I'll move forward.
Okay. Can you repeat it?
You, sorry,
Repeat it, please.
I shall repeat.
Yeah.
Okay. I'll just make it, I'll just write it neatly once again. Okay.
Okay.
Revenue or sales. So how many cakes he has sold? 1200 at the rate of $10 per cake. $12,000 is the revenue. And like the cost. So sales minus cost. I'm taking all cost is equal to profit. Isn't it so? Why you would be doing a business? You would be doing a business to earn profits. So cost, see,
Make
I'm
profit,
not
yeah.
writing. Sorry. Hello. Hello.
Yes, sir.
Yeah. Are you following?
Yeah. I'm following you.
See, so the cost here I'm writing is I'm just generalizing the cost. I'm not writing the cost specifically like direct expenses, indirect expenses. I'm just taking all the cost together to just make you to understand the concept. Okay. So cost, what the cost they are incurring. Uh, uh, so what did I take the cost? I take, I have taken purchase of raw material, salary to staff. So cost is like this: purchase of raw material, it's like $2,000. Salary to staff is $1,000. And the next expenditure what I've taken is rent of the bakery, electricity charges, power, rent of the bakery. Let's say it is $1,000. Let's say $2,000. Electricity charges $1,000. So two, three, four, five, $6,000 all in all. And then like we can take what, audit fees $1,000, legal expenses $200. So all in all this is $7,200. And how many cakes I'm selling in a year? 1200 cakes. My cost is 7,200. So per cake it is costing me $6. $6 cake I'm selling for $10. I'm getting a profit of $4 on a cake. Correct? So now like if I take this expenses here,
Yeah.
7,200 I'll subtract. But just make a note of this, Bishara. I'll move forward. Just make a note of this.
You can move, sir.
Yeah, there's like heavy rain falling here. Yeah, completed. That's the reason why we have network issues. Now, so what is
Yeah.
the profit, Bisharo? 4,800. Correct?
4,800. Yeah.
Yeah. So if I take 4,800 by 1,200, you see $4 is my profit per cake. Correct?
Yes.
So this is
Yes.
what I'm doing business for what purpose? I'm doing business for this. Am I right?
Yeah, you're right. For
Yeah.
profit.
Yeah, for profit. So this is the way you can just generally find the profit. Now I just wanted to give you a rough picture of what we are studying today. Now let's enter into the chapter and deeply understand the concepts. So now
Yeah.
let's understand the format of income statement. That is the statement of profit or loss. I'll explain you the format. 2 minutes. So this is the format of income statement. I'll explain you the format. You can clearly understand the format. Okay. So it starts with revenue, then cost of sales. So cost of sales, I will write it in details. You write down the formula. Cost of sales. So it is opening inventory plus purchases. If there is any purchase return, less purchase returns here itself, minus closing inventory. So this is the formula for, or I'll write in horizontal way. Cost of sales is equal to, this is the formula. You can make a note of this, or opening inventory plus purchases. If there is any purchase return, you have to subtract here purchase returns minus closing inventory. Just make a note of this. I'll explain the concept behind this to you. Okay.
Okay.
So what happens? Yeah, what happens? See how it goes. Suppose, let's say you bought 120 boxes. Let's say you bought 100 boxes. Okay.
Okay.
So is it necessary that you should sell all the 100 boxes? No. You sold 80 boxes and 20 boxes are still in your closing inventory or ending inventory, correct?
Correct.
So now you have to find out the profit for 80 boxes, am I right? Not for 100 boxes, because this is what you sold. And you have to take the expenses also for 80 boxes, not for 100 boxes, correct? So we will start in this way. So like each box, like the cost of one box is like $10, and you're selling like one box. Selling price of a box is $12. Okay, so you're selling one box for $12 and you have bought one box for $8, or it is costing you $10, correct? Now
Yeah.
revenue. Revenue I would take for how many boxes? 80 boxes, correct? So 80 into
Yeah.
12 is 960. Yeah, just a second, Bishara.
Okay.
Yeah, just a second, Bishar. I'm getting a call actually.
Okay.
Yeah. Now, so revenue is for like 80 boxes and less the sales, cost of sales. So we can take cost of sales. So now I'll see opening inventory is nil because I don't have any opening inventory. Purchases. I purchased how many boxes? 100 boxes. So 100
80.
at the rate of, sorry. No, I'll get back to that. That's what I'm trying to explain. 100 boxes at the rate of 10. It is how much? $1,000, correct?
Yeah.
Less closing inventory. So how much is the closing inventory? Like I sold
Once.
only, yeah, 20, I sold only 80 boxes, so 20 boxes. 20 at the rate of 10, that is $200. So all in all, it is $800, correct? So 960, and if you see, 80 boxes I sold at the rate of 12, and 80 boxes it costed me 10. So 800. So 160 is my profit. But instead of writing it directly, I'm trying to explain you the concept here. So opening inventory we have 0. Purchases we have purchased 100 boxes. We did not sell 20 boxes. So we are removing that what we did not sell. That means if from 100, if 20 is left over, so
No.
how hello, hello. See, out of 100, if 20 is left over, so how many did I sell? Hello, hello, Bisharo, can you hear me? Hello.
Yeah.
Yeah. So
Yes, sir.
yeah,
Yeah.
yeah.
I hear you
So yeah,
now.
so yeah, hello. Yes,
Huh?
yes, yes. So 100 boxes. How much is left over with me? 20 boxes. So how much did I sell? 80 boxes.
80. Yeah.
Yeah. So now this is 800. So 960 minus 800 would give me profit of 160. That is called gross
That is.
profit. That is called gross profit. Okay. Please write it down.
Okay.
Yeah. I'll tell you what is gross profit. First, note this down, please.
Okay, sir.
Yeah. Now,
And go ahead.
so yeah, yeah. So you have written. Okay, let's move forward. Yeah.
Yeah.
Now, yeah, yeah. Now we will move forward and understand the concept in a broader way. So it started with revenue. I explained you what is cost of sales. You get gross profit. This is the profit from the prime activity or core activity of your business. If your business is a manufacturing concern, then you take revenue and you remove all the direct expenses, okay, which are directly attributable for your prime activity, which is manufacturing or let's say trading. Okay, so then you get gross profit. You add all the incomes to gross profit, like any kind of income, let's say investment income. So the investment income can be what? Can be interest received, can be dividend received. So you have invested in some bonds, they pay you interest. You have invested in some stocks, they pay you dividend. So these are other incomes, okay? or if you have sold some asset, some land, some property, you get profit on sale of asset. So you can write that here, okay, in other incomes. So to gross profit, you add other incomes, and then you subtract all the expenses, every kind of expense like selling and distribution cost, administrative expenses, any other expenses like finance charges, finance cost, anything. Then if you remove all these expenses, what I've just put in a column, and suppose if your company has invested in some another company, let's say this is XYZ group. So group is nothing but it is two companies as one company. That's called group. Okay. So this has invested in like in X company. So no, let's not confuse, in PQR company. Okay. So this PQR company, they have invested 25 to like 28%, let's say. They have invested 28, or let's say 30%. 30%. So this PQR company will become the associate or affiliate of XYZ company. Okay. Why associate? If you invest more than 25% in a company, okay, if you have stocks or holdings of more than 25% in any company, that company would be called your associate or affiliate. Okay. So you would be getting share of profit. Suppose let's say the profit of PQR is $100 and you have invested 30%. So you get $30 from this profit based upon your share. Okay. That's called share of profit of associates. Then you get PBT, that is profit before tax, and you need to pay taxes to the government, income tax expense you deduct. You get profit for the year. Okay. So please write down till here. Okay, I'll give you this. Please write down till here the format. Then I'll move forward. Make a note of this. Bisharo, are you making the note? Hello.
Yes, sir.
Okay, okay. So sorry from my side. It's like raining heavily. There is a lot of network problem here today.
Yeah.
Your Somalia has good network, it seems, but here like we are struggling with network today. Meanwhile, I'll send you cash flow statement video today at any cost. After this class, I'll send you. You just go through that. Okay. You know how to prepare cash flow statements? Hello. Hello.
Also, network connection is poor.
Sorry.
Sometimes I can't hear you very well.
Just a second. Just a second.